Today we have a really special guest, Mr. Ron Rinden. He's a mortgage lender from Southern California. Ron and I have been acquaintances for years, and in thinking of someone I'd like to talk about mortgages for our show, Always Ageless, definitely Ron Rinden was at the top of my list. Ron's been in the mortgage industry as an originator for about 40 years. And the one thing that I've always enjoyed about associating with Ron is, first of all, that he always cared about what was best for his clients, always wanted to make sure that the deal closed and it worked well for them. And also, he's very competitive. He wanted to make sure that if he made a promise to someone, that he was able to carry through. And those are two qualities that we don't see often, certainly not anymore, but that are really, really important. So Ron, welcome to Always Ageless. We're so glad to have you here. And today Ron's going to talk to us about some of the new things we see in mortgages and one loan program, which I think is the most misunderstood program in the mortgage industry. Welcome to Always Ageless.
Well, thank you, Valerie. I'm honored that you would have me here today. I've always enjoyed being with you in our meetings and even working together on the transactions that we've had over the many years.
Okay? And we certainly have done that.
We were friendly competitors for many years with a company called Tarbell Realtors. Is now out of business. She was a loan officer for the builder division, and I was a loan officer for the resale, or what they call the real estate side. And each month we had a contest of how many loans we could originate and close. It was always, I'm going to beat Valerie this month, or she's going to beat me this month.
Absolutely.
So it was always a lot of fun, and that competition there's nothing better for success than competition. Okay, it forced me to have a good attitude, and those are some of the best days that I had in the mortgage business when I worked for the company was called Mission Hills Mortgage. They were owned by Tarbell Realtors, and it was a large family-owned real estate. And those were some of the best times that I ever had in the business doing that. And I was the busiest that it was. It was a lot of fun, and we closed a lot of deals and stuff. So
we absolutely did. And I know Ron's closed thousands of transactions. He's helped thousands. Rather than talk about it that way, I really want to say Ron has helped thousands of families.
Yes. And the way this business is and how it's changed is it's still going to be a people-to-people business, no matter what you do. Okay, you can't shop for a car on the computer. You can, some people do, but you got to go down and drive the car. Okay, you have to see if you like it. Just like a home shopping, you can look on the screen and stuff, but you got to go check out the house. Same thing with mortgages too, because it's the mortgage business is extremely complicated as far as the paperwork that you need to get, how you qualify, and you have to have somebody that you can relate to or trust. And me, myself, I tend to, being a salesman, I look at other people when they sell, and I don't like someone that's one fast talker. I like to have something explained to me, so I understand it. So I try to talk to my customers that way and reassure them that there are no dumb questions. If you ask me a question more than one time on the same topic, I'll treat it like it's fresh again. I won't say, well, you already asked that. You never do that, okay? And you try never to correct the customer, okay? That's something I've tried to teach my kids this day and age. Is there's an old saying, as we get older, unfortunately.
And we are.
Yes, the customer's always right.
Always.
Okay, and there's a way of answering questions that you make people comfortable. And what has been successful for me is listening to people's stories. And I am a total history freak and a geography freak. And I have a multitude of people from other countries, from Egypt to Vietnam to, I'm married to a Venezuelan, from Latin America to Europe to Bosnia. Okay. And how I used that geography in my history was through a concept called matching. Okay. When I'm talking to someone, I try to find something that I can relate to. And one of the best realtors that I got years ago when this is like 1986, was a Tarbell office in Buena Park. And the realtors they don't like new loan reps because we frankly don't know anything. We just got started in the
Sure.
business,
Yep.
right?
Yep.
And so this agent, her name was Helga, and
I remember
she
Helga.
didn't even talk, wouldn't even give me the time of day, wouldn't even say hi to me, right?
Right.
Except one day I went by her desk and I saw, you get a travel card, like a card from, talking to you from Vancouver, Canada.
Right.
The card, it said Belgrade on it.
Oh.
And I looked at her and I go, so are you a Serbian or a Croatian? And she looked at me like, what?
Well, because in those days, those countries weren't that
exactly.
well known.
And she was from Yugoslavia. And she goes, how do you know that? I said, well, I study about you. And so she opened up about, first, as an American, I even know what Belgrade is.
Right, absolutely.
And where it is and anything about the history of it. And so I got started getting business from her because I was able to relate to her on a people-to-people business.
And that's one thing you're always good at. And for those who are listening and viewing, I have learned a lot from Ron Rinden. A couple of things that I remember is that I have trouble telling people bad news. Because I think they're going to yell at me, probably somewhat from my upbringing. And Ron taught me, he said, if you have bad news, share it. Don't keep it to yourself. Share it, because then you can honestly say to someone, I just found this out and I need to tell you. And so I think of that. I think of Ron when I'm in a situation where I have to give somebody some bad news. I'd rather not tell them, but I do it. And I think Ron always said, if you have bad news, share it. Don't keep it to yourself. So that's one lesson. Another lesson I learned, which is kind of along the same lines, is that when I totally lost my train. I'm sorry. So another thing is that when someone would call, when I would call someone, I knew I was going to give them bad news. And I knew based on who the client was, that they were probably going to yell at me. They were going to be very unhappy, not so much at me, but the situation. They didn't get approved for their loan or something. And Ron said to me, if they yell at you, this is what you say. You say to them, do you want to know the truth? Do you remember this? And they would say to me, of course, I want you to tell me the truth. To which then I would answer at Ron's advice, if you continue to yell at me, it's going to make it very hard for me to tell you the truth. So if you want me to hang up, I will hang up. But if you want to know the truth, you have to listen to me and let me tell you. And so many times when I've gotten on a call and I had to share some bad news with someone, that I would remember that just tell them that if you want to know the truth, you have to let me tell you. And so many times that's diffused situations. So I've learned a lot from you, Ron, and you were always good about dealing with people and solving problems. And sometimes you could turn it into a joke and have everybody laughing about something. So you're a great storyteller. And for one of those reasons is why we're so glad to have you here today. You are a great storyteller, always has stories. And Ron has some great hobbies I want you to hear about. So many things. He can sit down with you and you can listen to him for hours and hours with all of his great stories, but we don't have all day. We just have a little bit of time today, and we do want to share some of his stories with you. But Ron, one of the things that I find fascinating, and our program is called Always Ageless, where we're here to help people in their aging years to have fun, and certainly you know about that, to have fun and be comfortable and make wise decisions. And it's so hard when people are getting a little bit older. They just feel so unsure of themselves, or like they've lost control of their lives. And they might have a child who wants to take care of them, like I do, and like you had with your parents. And we're going to talk about that also, where their kids say, all right, well, obviously you need my help, but I haven't seen you for 20 years, right? And I live in New York and you're in California, but Mom, I know better than you do. So people are so confused and they just don't know what to do. One of the programs I hear about so much is something that's called a reverse mortgage. And I know there are other shows on this station that talk about reverse mortgage, but I wanted you on, Ron, because you're actually you're going to help us how this actually works for a family, for a couple or an aging person. So I just want you to start out by giving us a few of the basics. What is a reverse mortgage? what some of the basic criteria, and then let's talk about some examples and how this works and how how do you put it in practice? So give us some basics.
Okay, what a reverse mortgage is, well, in the title. Okay, well, let's say what a mortgage is. What a mortgage is you take out a loan against your house or condo, and then you start paying that loan back over a certain amount of time, be it 10 years, 30 years, on a monthly payment. Okay, that's a regular mortgage. Now, a reverse mortgage is the opposite of that. Okay, they're going to give you a loan and then you're not going to pay it back. But
Oh,
you're not going to pay it back.
okay.
But is it free? No, nothing isn't life is
Nothing's
free.
That's
But-
unfortunate.
But what they do is instead of you paying the monthly payment, the lender will not, they won't do any principal. What they'll do is they will charge you a monthly interest, and that goes on top of your loan each month. Okay, so your loan will be growing, all right? And you can, let's say if you own your house free and clear, there's many more mechanics to it. You can get a reverse mortgage against it, like an equity line of credit, and then you don't have to make any payments. The only payment that you have to make on a reverse mortgage is you have to pay the property tax that you pay anyways. You have to pay
Okay.
your homeowner's insurance and you have to maintain the house, keep it in an orderly manner. If there's a condo association monthly,
Sure.
you have to pay that. But there is no mortgage payment per se. All right. And so your loan will end up getting larger, but then again, your house is going up in value also. You know, real estate is appreciating. So if your mortgage is growing at 6 or 7% per year, but your house is appreciating at 8 or 9% a year, you're not really losing any equity position per se.
Okay, so let's go back to the very beginning. So I have a house that has a $300,000 loan on it.
Mhm.
All right. And you're telling me that someone is going to give me a mortgage that, did you say I don't have to make any payments on it?
That's correct.
Okay, but I do have to pay the taxes and the insurance. And if it's a condominium, I have to pay the homeowners association.
That's correct.
That's what you're telling me.
Right.
All right. So I have a loan. Is it correct? I have a loan with a lender, a bank, a lender. Is that correct?
Correct.
So I have a loan for $300,000. All right, but I don't have to make any payments on it.
If it's a reverse mortgage, you
If
don't.
it's a reverse mortgage, I understand. So let's just talk about reverse mortgages. All right. So and we know one more thing, that a part of a mortgage payment is two things. There's principal and there's interest. The principal pays off the balance and the interest is what the bank charges.
Right.
Which right now we're talking about 5% interest right now. We're
Right.
fortunate. They've been about 6 or 7, but
Right.
right now we're back down to about 5.
Right.
All right. So there's 5% interest being charged on that loan, and there's the principal of $300,000.
Mhm.
So now tell me how but the lender still wants to get their interest. They're not giving you a free loan.
No,
No. Okay.
no.
So what is happening? Who's paying for that interest? If I'm not paying for the interest, who's paying for the interest? And is anybody paying the principal?
No, there is no,
No.
you're not paying the principal.
That sounds pretty
Okay,
amazing.
okay.
Is this one of those, Ron, if it's too good to be true, it must be bad?
No, because once you understand how it works, then you'll see where the cost is.
Okay, so I'll
Okay.
now go back to my question. Tell me
Right.
who pays the principal and interest.
There, on a reverse mortgage, there is no payment of the principal. What they do is they charge you a monthly interest. And what they do is they put that on top of your mortgage.
Okay,
Okay.
so if my house payment, let's just say my house payment is $2,000 a month, whether it is or not, now that's not including the taxes or the
Right.
insurance.
Right.
Just the mortgage payment is $2,000.
Mhm.
And let's say that $1,200 of that is interest
Uh-huh.
and $800 of it is principal.
Mhm.
So are you telling me, Ron, that $1,200 gets added to my loan amount every month?
Yes, that's how it works.
So I don't, and what about the principal? What about the
We're
$800?
not paying off the principal.
We're not paying off the principal.
No,
All right, so
no.
every month, every month, $1,200 is being added to my principal.
That's
So
correct.
this month, my loan amount is $300,000, and next month, it's $301,200. Is that correct?
That's correct.
So every month, my loan amount goes up.
That's correct.
Okay, well, what? All right, so I keep owing more than what I started out with.
That's correct.
All right, so why would I want to do that, Ron?
Well, because then not having to pay $2,000 a month
Right?
is income in your pocket.
Well,
Okay,
that's
if I,
true.
if I don't,
That's true.
if I don't have to pay that $2,000 a month, that's income in my pocket. I could pay $2,000 to something else. Okay, I could get myself a car. I could do myself another motorcycle. Okay,
All right,
that's how that works. All right.
all right,
And so why would I do that is because I want to have a more comfortable life. Okay. I'm 67 years old. Okay. I'm not going to pay off a 30-year mortgage unless I'm from Georgia or some country over in the Caucasus Mountains. Where they
oh,
live to
Ron, you'll
120.
probably be here 30
Right,
years. from now,
exactly.
and we'll still be friends.
Right, exactly. But that's the whole thing with a reverse mortgage is for people that were a little older, that you can enjoy the equity that you have in your house and you know, enjoy life more.
All right, so let's say that my house is worth $500,000
Okay.
and I owe $300,000 on a reverse mortgage. All right. And so every month my house, my value, my loan amount is going up $1,200. So Ron, what happens if pretty soon, well, not pretty soon at $1,200 a month, but what about when those $1,200 keep adding up and now I owe 500,000 and my house is only worth 500,000. I used to owe 300. Now I owe 500. Tell me what happens. What about, how does that work?
Nothing. You get to stay in your house till you go to heaven or that other place.
We hope so.
Okay, exactly. Because here's how it works. Okay. And the thing with the reverse mortgage, it's kind of a, think of it as like a life insurance, how they figure out what they charge you for life insurance, okay? It's a life expectancy thing, okay?
Oh, okay.
And so if you live to be 110 years old, well, the bank's lost out. Okay, let's say I'll give you the example on my reverse mortgage, okay?
Oh, okay.
Okay.
You have a reverse
I have
mortgage also.
I have a
Oh.
reverse mortgage on my house, and my
Okay.
current balance is 335,
Okay.
and my value of the house when I got it was 763. Okay. Now, I just recently stopped making the interest payments. You can pay the interest. People don't realize that with a reverse mortgage, you can pay the interest, which is interest only is going to be a way smaller loan payment than principal and interest, even if the rate's slightly higher. So I've just recently stopped paying on my mortgage because I took Social Security this year. So I really wanted to have a better quality of life issue. But let's say that my loan keeps going and going and going and going. Let's say that I'll give you an example. Let's say that in 10 years, my house is only worth $600,000. But my reverse mortgage, because I quit smoking and drinking and doing everything else, and I'm going to live to be 95. My house now, I owe $700,000 on a house that's only worth $600,000. What does the bank do to me? Nothing. They can't do a thing. They cannot do one thing to me because I and my wife, if I pass, she gets it. She gets to stay in the house until we have that, you know, coming to the Lord. All right. They can't do anything with you. They can't evict you. They can't send you a notice. Hey, we want you to start making mortgage payments. If the loan goes to $1 million bonus balance and my house drops down to $400,000, there's nothing the lender can do. Okay. You get to live there forever. Okay?
So what you're telling me is that, because, you know, I just want to make sure I understand. And I want to make sure for our listeners and our viewers that they understand, because we're going to then talk about the myths about reverse mortgages.
That's the myth right there.
So what you're telling me is that if when I get a loan for 300,000, the house is worth 500, and I live so long, and like my mom's 104, right? I hope I do. So I live so long that I keep adding $1,200 a month to that 300,000.
That's correct.
And all of a sudden I owe 510,000. Now we know that when I got the house, it was worth 500, but we're in Southern California and probably the value is going to go up. But let's just say pretty soon I owe $525,000. And we started out at 300, I owe 525. And let's say that the house hasn't gone up in value. It probably has here in Southern California, but let's say it hasn't. And so it's still only worth 500,000, but now I owe 525,000. And you're telling me that the lender's just going to forgive that?
They have to, it's in the contract.
But who actually pays that?
The lender.
Does the government pay that?
Well, you have on a reverse mortgage, you have MIP insurance.
It's mortgage
Okay,
insurance.
yeah, 'cause
I want to tell our lenders
it's
and our viewers, right?
It's a FHA product. It's an
FHA loan. All right.
Exactly. And it's what happens is the lender has to eat it. Okay, if they sell the house for 600 and you owe 800 on it, well, there's $200,000 that they're not going to collect. Okay, that's a bad debt. Here's one myth that, since we're on this topic, is
Since
that
we're talking about the myths of reverse
right,
mortgage.
the myths of reverse mortgage. Okay, so does that really hurt what happens like we both pass and are my kids liable for that outstanding balance? The answer is no. Okay, no, your family members are not liable for any outstanding loan on a reverse mortgage. Here is an interesting fact that a lot of people don't know, since you brought this up, Valerie. Okay?
Yes.
This example here. Let's say, I'm going to go back to my example here. Let's say that let's say on my house, the value is $700,000, okay? And I've lived long enough that I owe $1 million on the house, and I pass away. Well, are my kids on the hook for that extra money? The answer is no. But what if the kids wanted to buy my house? What if they wanted to buy my house, but there's $1 million owned? Do the kids have to pay that extra money? No.
They don't.
Here's how it works.
Okay, tell us, Ron.
Family members, when they have a reverse mortgage, okay, my son can buy the house at 95% of the appraised value. Let me say that again.
At the time you die.
At the time I die. So if the house is worth $700,000, okay, the house is worth $700,000. Okay, I'm going to do a little quick calculation here.
Okay, all right.
700 times 0.95. My son and my daughter could buy my house for $665,000, even though there's $1 million owed on it. Now they have to go out and get a loan and get 10% down like a regular transaction, but they don't have to pay an exorbitant price. In fact, they get a discount on the appraised value. 5% off of the appraisal, and it's a regular appraisal. And the lender eats that balance.
And even if you owe $1 million,
yes,
you're Garrett and Courtney get to buy it for $695.
That's correct.
That's pretty amazing. So one of the myths I hear, and one of the things why I wanted to have you here to talk about it, Ron, is I hear so many people say that I don't want to do that because the government's going to get my house.
No, the government doesn't. You own your house. It's in your name. It's like ours would be husband and wife as joint tenant. My wife, Annabella, and me. We own the house. The vesting is Ron Rinden and Annabella Wolf Rinden. We own the house. The government doesn't take your house. Okay, if you pass, if let's say I pass away and I have no heirs or anything like that, well, they're going to sell the house and get whatever proceeds to satisfy the loan, like any loan. Okay, like any loan. All right. If they sell the house, okay, let's go the opposite way. Okay, I was underwater by $300,000. Well, what happens if there's still equity left? The lender's going to sell the house. Any proceeds, that means money left over, goes to the heirs. That's the rule of reverse mortgages. So my kids would get anything left over.
So if there was money left over, so give us an example, Ron. So what if that would be like if your house was worth
$1 million.
$1 million.
And I owed $700,000 or $800,000. There's $200,000 of equity. Well, the lender's going to get paid off the $800,000, but they don't get to keep that $200,000. That goes to my kids.
They just get paid off. the
Yes,
balance of the loan.
just like you sold a house
Yeah,
in
this is-
escrow.
This is pretty amazing. I hear all the time people say, well, I don't want to do that because the government's going to take my house.
Right.
The government's going to take my house.
It's not the case at all. And another reason that I personally got the reverse mortgage is because it helped me get into the house that I'm in now. And it is the reverse mortgage is the only, I'm going to say it again, the only loan that is an interest-only loan that you could pay interest-only loan on forever. I'm gonna say that forever. Okay? Any other loan out there, and you see them, and people are advertising these HELOCs, right? These second trust deeds
Right.
or these. Well, guess what? All of these other interest-only type loans, something bad happens in 10 years.
Well,
'Cause they
tell
gotta
us
get
about-
you paid
What is
off.
that?
Well, your loan gets readjusted and your payment doubles in most of the case. It doubles because they have to get you paid off in 25 or 30 years. We got to hurry up. You haven't been paying on the principal. So now you spent 10 years paying interest only, but I still have all this principal. Your payments, a lot of people get really surprised at the 10-year mark. Those loans are not made necessarily for the good of the consumer. The rate is less than a credit card rate for sure, 25% a credit card bill.
Sure.
Oh, and then you're only paying the second is like 10% or 9%. Oh, that's really a cheaper rate. That's not the issue. That's the good part. The issue is in the 10 years. You're going to have to either pay off the loan or get ready to make that higher
Start paying it back.
mortgage payment. Exactly.
But what you're telling me is with a reverse mortgage, you don't have to start.
No, there's
don't
no
have-
time frame. You live in it, you live in the house till you go to heaven or
Yeah,
the other
okay,
place.
We get that.
Right.
Okay. Right.
Okay, so that's the reason I personally took it for that reason. And I could control what I was paying. I was paying the monthly interest each month because they send you out a statement and
Uh-huh.
it tells you what you're charging. For the first year, I was paying the interest only, and I just stopped paying it this year. When I got my Social Security, I stopped paying it. Okay, so yeah, is my mortgage going up each month a little bit? Yeah, it is. But then again, so is my home value. All right.
Okay. So we've established that the government does not get your house.
No,
No time during the reverse mortgage does the government get your house unless
you stop paying your property
Stop paying your
taxes
property.
and your insurance.
right.
Right.
And then
because-
they take it back because it's a risk factor.
Right, right.
If you live there, you have to pay your
Property
taxes and your
taxes,
and your
right.
insurance.
they can seize the house for the taxes. Takes them a long time, but they will eventually get their pound of flesh. The government always does on property taxes.
Okay. All right. So we've established that. And I want our viewers and our listeners to hear this because this is from my heart. I want to be sure everyone understands clearly, no matter what anyone tells you. And if anyone tells you anything else, you call me at 714-334-9156. And I'm going to tell you that it is not the truth. The government does not at any time own your house unless they take it back because you couldn't pay your taxes and insurance. That's the only reason. Otherwise, the government does not take the house while you're alive. They don't take it when you die. They do not own your house. Your name stays on the title. No change in title is made, and you still own your house. I want to be sure, Ron, that our listeners and our viewers know that. The one thing I want everyone to come out of this
Right,
call away
right.
with that fact.
And your kids could buy your house for.
And your
reduced
kids could buy
price.
your house. All right.
Exactly.
So now tell me a little bit about, and there's so much I want to talk about today. Fortunately, we still have time. I want to know what are the different types of reverse mortgages? Are they all, can you refinance your current home onto a reverse mortgage? Are they all fixed rate loans? How does a reverse mortgage actually work? What kind of a loan is it?
Well, I'll give you an example of, okay, and I did a loan for these people in Fullerton. is they were an elderly couple
Mhm.
and the house was free and clear.
So I'm gonna interrupt you here for a minute, Ron, and I want you to get on the screen, because I want all of our people to be sure to see you, so you need to come in a little bit more. There you go, great, we have to get closer together.
Okay.
But we've been friends for a long time,
Forever,
it's not a
forever.
problem. Okay, all right, so before you tell that story, let's interrupt here and tell them there's one criteria about reverse mortgage that really sets it aside from all other loans. And what is that? Age,
Age,
right? And what is that age?
62.
Right, so what does that mean, Ron?
That means you have to be the youngest borrower has to be at least 62.
So if there's a husband and wife, and one is 55 and one is 70,
You have
believe
to
it,
be 62.
okay,
Right.
so believe it or not, someone called me this week who wants to buy a home, and the husband is 85,
Mhm.
his wife is 32.
Good for him.
Do they, true story, true story, I can show you my text messages, that's what I wanted to say. Can they have a reverse mortgage? Not
No.
if they're married,
Right.
all right,
Now,
okay,
okay, I'll stop you right there. And I have seen this. If they weren't married, right?
yes,
Technically, he could get a reverse, but they look at who's living there. Okay, so you could technically do a little, honey, you got to move out for a while. Okay, which is
well, we're not gonna do that.
right, right. But here's what,
Yeah.
here's what's happened when I have seen where someone got a reverse mortgage, back to this example, and then he met somebody who was not of age to get the reverse, so she's not on the deal, and then he dies. Well, guess what she has to do? She has to move out because she's not on the title.
Okay, so let's go back here. So he's over 62. And he gets a reverse mortgage when he's on his own. He's the only borrower at
Right,
that time.
right,
Okay.
right.
And then he gets married.
Yeah, but she's
Right.
not on the deal.
And she's not on the loan, and she's still not 62.
That's correct.
All right. So he dies, and now his spouse, who was not on the loan to start with, is still under 62. And he has a reverse mortgage on the house, but she's not 62. And she wasn't on the loan to start with. So tell me again what has to happen, Ron.
She has to refinance or get rid of that loan. She has 6 months to do it, and she can get an extension after that, but she needs to basically refinance and pay off that reverse mortgage.
And what would happen if the surviving spouse was over 62, was on the loan, all those things, and they pass away? Can the kids move in, or they have to buy the house?
They have to buy the house.
They have to buy the house. All
Right,
right.
right.
Okay. And they
Yeah.
have 6 months to do it, and is what you're
Right, and
saying.
you can extend that. If you can, I've helped people get an extension on that, okay, from the
Alright.
reverse lender.
Okay.
But typically a reverse mortgage is, in this example in Fullerton, husband and wife, they were in their 70s, pushing 80s, and he might have to have gone to a nursing home. We didn't, at the time, he was still living at home. So they got the reverse mortgage because the house was free and clear. And the reverse mortgage that they get, a lot of people get this, is they got approved for like $300,000. It's like an equity, a line of credit on the house. So what happens is you get a recorded of $300,000, but they only took out maybe $50,000 when the loan closed. Okay. And then so they have $250,000 that they could write a check for or ask the reverse mortgage to transfer the funds to use it for any medical emergencies. That's what they did. And they don't have to pay. They weren't paying any interest on it because they didn't take the money out yet. You only start paying once you did take the money out. Okay. And so that's the most popular way, because then the borrower, the homeowner, can control their own finances necessarily.
Sure.
Okay, those loans are either a fixed rate or an adjustable rate. Okay, and those are pretty self-explanatory. The fixed rates are slightly higher than the adjustable rates. The thing is that I took an adjustable rate, and the reason being is I got more of I got a larger portion of my equity to use as opposed to a fixed rate. Does that make sense? Because I did take an adjustable rate. All right. Let's say that I was going to get a fixed rate. In my example, instead of getting a loan of 335, it might have been for like 290. That's how they do it. Okay. And so those are the two. You get a fixed rate or an adjustable. The third kind of loan or the other reverse mortgage that I've seen people do, and you get this is the one you get the least amount of money out, unfortunately, is you can get a reverse mortgage. Let's say your house is free and clear. I can get a reverse mortgage where I'm paying you, the lender is paying you a monthly income.
Ooh, that sounds interesting.
It is interesting, but what this is one of the too good to be true type of things.
Oh, I knew there was a
Right, there's a
somewhere.
catch. There's
Yeah.
always a catch. It is okay. So, and let's say in my example,
All
okay,
right.
I want the lender to pay me $2,000 a month of income. Okay, so I get $2,000 a month in income. But let's say that I need to buy a new car and the car costs $20,000. Well, I gotta wait till I get how many months? 10,
Oh,
because I'm only getting $2,000 a month.
oh,
See how that works, as opposed to I had the equity line I could draw. I could write a check for $20,000 right then and there down at the car dealer. I can control
Oh.
when I get that money. See, but if you're getting it doled out to you, well, that's the agreement that you made. You're getting it doled out to you.
Oh, so
You
you
can't
can never
call
get
them
more.
right, because that's not the type of loan that you got. So I've only seen one person in my life take that because that's what they wanted and that's what they got. But almost everybody that gets a reverse mortgage, they get an equity line of credit, and they'll limit you on what you can get your first year. Okay, so like in my example, let's say my house is free, my house was free and clear, all right? I got approved for like 330 something, but my first year I could only get 100. Okay, why do they do that? Because it's protection. They're out
Sure.
protection for people that are over 65. They don't want to have undue influence by family members.
Sure.
Say, hey, Dad, I need this extra money. You see that, or I'm not going to get political here. Some
Yeah.
families have some pretty weird situations. So they protect you on that. In fact, I was limited by $120,000. I had to wait for my 1 year anniversary to get the rest of that. And when you go to get the draw, they actually interview. They go, well, what are you getting this money for? Is this money to give? Are you giving a family member this money? Is this money to buy ostrich farm in Bakersfield? I mean, what is this? Which I did once. What is this money? What is this money for? They want to make sure that there's a certain criteria that you have to tell them what the money is for. Yeah, I was paying off another bill.
Because you don't want a
Be
partner or a sibling or a child
to
come
be
in and say,
disenfranchised.
Dad, you've got all that money.
Right.
Now you've got that reverse mortgage. So why won't you
Right.
give me some?
Right. That's
Okay.
that's why in fact, one of the good things about a reverse mortgage, and the technical name of the loan is a HECM, HECM. It's called a HECM, Home Equity Conversion Mortgage.
Mhm.
What you're doing is you're converting your equity into useful funds that you can use. Okay.
Mhm.
Before we talk to customers, and when we've worked together, Valerie, on the one that another good story is I can't even really meet with you or interview with you until you do a counseling session. They have counseling, and I had to go through it myself when I got my own reverse mortgage. They get my wife and I on the phone, and then they ask us all kinds of questions. What is this for? Do you know what your budget is for your laundry and this? They want to make sure that you're of sound mind, I guess, and you're not being taken advantage of.
Right.
They asked me several times, are you using this fund to do another real estate investment and all this thing? And the answer was no, it wasn't, okay, at the time. So, and they give you a certificate, you get it in the mail. Once you get that certificate and I get it, then I can start working on your reverse mortgage. But I can't do anything. No lender can do anything until they've gone through that mandatory counseling session.
All right. So now we know that the government isn't going to own your house. We know that the government's going to try to protect you by making sure that you don't take out more than what you should at any given time.
Correct.
They don't want anyone to scam you. We know that. Let's talk about the situation that you and I worked on together, because I think it's a fascinating story. It's a heart story, story from the heart. And most people don't know that this could even happen, that it's almost too good to be true. So tell us the story. We met with a family here in Orange County. A couple who, the husband had disability, he couldn't work. They were both and he hadn't been given disability yet from his employer, so they were really struggling. She had very little income and they were really behind, had no credit, no chance of being able to buy another home. They had a home where they had a lot of equity, but they weren't going to be able to buy a new one. They couldn't afford a house payment and they were just stuck. They couldn't afford a house payment. They had some equity, but not enough to buy a house in Orange County. And some people would have said, some agents would have said, or people would have said, well, I'll sell your house for you, right? I'll sell your house. Just give me your house. I'll sell your house. And there was a commission in it for them. And then they could have gone and rented. But if our clients had gone to rent, they would have, the rent payments would have gone up year after year after year. We know that. Landlords raise rent payments for a reason. They need to, cost of living, so forth.
Or a hard money loan.
Or hard money, or someone else, and they had looked at getting hard money loans, which would have been a disaster. So let's let our listeners and viewers, and I want them to hear this so clearly. What were you able to do for those people, Ron, so that they, number one, didn't have to become lenders, and number two, they weren't out on the street, which was a very strong possibility for those people. And number three, they didn't get stuck with a hard money loan or with an apartment that was going to go up in rent all the time. What were you able to do for them?
We got them to buy a house.
So they sold this house, sold the house here in Orange County.
They sold the house, and then we got them to buy a house, and we used a reverse mortgage for the purchase.
Well, how does that work? They bought a house with a reverse mortgage.
Yes, they did.
How did that work?
Well, they took the proceeds out of the house that they sold, and they had to you have to put over 50% down, which they had. It was like 55% down, and that loan wasn't a regular conforming loan, wasn't a hard money loan. That loan was a reverse mortgage that we put them in, and they qualified. That was the only loan they could qualify for, because they only had a couple. How you qualify in a reverse mortgage is it's different than tax returns and that kind of deal. You have to have basically right around $500 per family member left over. That means.
So do you not really have to qualify? Like you don't have to have income. You don't have to have a job.
$500 left over, like you get in Social Security. You have to have $500 a month left over for you, and then if you have a husband or spouse, $500 for them. So you qualify. You can qualify with getting $1,000 a month. I mean, it's pretty incredible. And they qualified for the reverse mortgage, and their credit wasn't very good at all. They could have never, even if they had the income, they couldn't have qualified for a regular loan because their FICO scores didn't meet requirements.
And they couldn't have rented an apartment because they had no income. Well, the credit scores, but also the landlord would have said, show me your proof of ability to make rent payments. And they couldn't have done that. They couldn't have done that.
So all they had to do is show that they had left over between the Social Security and whatever little income that they had, $500 a month, and they qualified for the reverse mortgage, even with their FICO scores. I don't know if they were even over 600, maybe.
And so they moved to another house that they owned and every day if that house goes up in value, it is appreciated in value, and those people are getting that equity.
Right.
And that's pretty amazing.
Yeah.
And it's a great story. They were able to move into a house. They owned the house. It was an almost new house, much better condition than the house they moved out of. And they could take their dog with them. They didn't have to worry about a landlord, more landlords. And they were in a place where the husband could walk. And all of the people around there loved to have him helping with their landscaping because that's what he did. It was a perfect situation.
And the seller it's a regular, you get a regular FHA appraiser, like a regular FHA loan, because it's an FHA loan. So the people that you use are the same of any real estate transaction. So it would be the same appraiser who does a regular FHA loan is going to come out and do the appraisal for that. So it was an easy sell for these buyers to get their offer accepted by the seller. Was no special hoops to jump through or anything special like that. You have that every now and then we get asked these questions about these special city programs. Well, yeah, where they're gonna give you like a silent second or something like that. Well, yeah, that's good, but in a competitive market, you're not gonna get your offer accepted by the seller because they don't want to mess with all that stuff. They want to have a clean transaction.
Right.
Okay.
Right. And sometimes people don't want to accept your offer because they think that there must be something screwy about it.
Right.
Like people don't want to accept
Right.
offers on VA loans or whatever because they think
Right.
it's hard to get approved.
Right.
In this case, it's so much easier because you
They
don't
had a
have
large
to
down
qualify.
payment. They had a large down
And
payment.
you don't have to qualify, and there were the right ages and so forth.
Right. Right.
One of the other parts of this that really frustrates me, Ron, is when I see people who are in a situation that a spouse passed away,
Right.
and all of a sudden they're out that extra set of income.
Correct.
Excuse me, they're out that second set of income. And so they say, I have to sell my house. I have to sell my house. I can't afford to make the house payments. So the realtor comes along and says, okay, well, I'll be glad to help you sell that house. I agree. You need to sell that house.
Right.
And I'm saying, no, you don't need to sell your house. Have you talked about a reverse mortgage? Well, no, because I don't want the government to get my money.
Right.
Okay. And instead, they could, even if they're on their own, they could possibly, if they're the right age and they have enough income that they've got residual, a little money left over,
$500 a month.
they could have stayed in that home. They didn't have to sell it. They didn't have to move out. And it pains me so when I see people who lost a spouse and all of a sudden their whole world is disrupted and uprooted and they have to move out.
Right.
We have a mutual friend who that happened to recently, except it was fortunately, it was really good news. Her husband passed away. They had a reverse mortgage. She's in a house she otherwise could have never afforded on her own. And she couldn't have, if once he passed away, she couldn't have refied and bought the house. She couldn't have stayed there. So instead, because they had a reverse mortgage, she was able to stay there. And every time I talk to her, say, how are you? She says, I'm so glad we had a reverse mortgage. I don't, because she doesn't work. So she couldn't have qualified for the tax. She has no residual income except Social Security.
Right.
It would have been very difficult. They had this reverse mortgage in place and the wife can stay in her home. That's amazing.
And you're going to leave, other misconception, well, you're just going to burn up all your equity. No, that's not true, because your house is appreciating along with it. So you're still going to leave something to your kids if that's your goal.
But let's look at it this way, Ron. What if they are eating up their equity? So what if their kids say, well, I don't want my parents to eat up their equity? Or what if the parents say, well, I won't be leaving anything to my kids then? I won't have anything to leave to my kids. And I'm going to go back to your situation here in a minute. But isn't it true that otherwise, who's going to pay for their care right now?
Right.
Who's going to pay for the caregiver that comes in the home every day? Who's going to pay to put them in assisted living?
Right.
So you either eat up the equity in your house, or you have to take money out of your pocket to give your parents the care or the living facilities that they need.
And it's expensive.
Right.
Yeah.
So you either pay for it out of your own pocket, then you have equity when they die, but who knows when they're going to die or what that equity will be, or you use that equity now so you can keep it in your own pocket.
Right.
So
Exactly.
if you had situations like that.
That's why I got a reverse to start with, is just because I wanted to have that control and to enjoy my lifestyle now without having to worry or looking over behind me about bills and stuff. I mean, by having my Social Security in the reverse, my income situation, like I said, not paying $2,000 is having $2,000 in income. You know, my retirement just went up by $60,000 a year. So I'm
pretty amazing.
I'm happy. I'm literally happy. And now I'm doing the mortgage business because it's a hobby and not a requirement. That's the difference.
Yeah.
That's the difference. And I love doing it because it's solving people's financial problems is what it is.
So let's talk about a situation that we also were able to share in, is that we had a lady who came to us, her husband passed away. She had no ability to stay in the house and she was determined she wanted to stay in that house. She didn't want to go anywhere. She wanted to stay in that house. She didn't want to move to another state. She wanted to be dependent on her kids. She wanted to live in that house with no payments.
Right.
So is there such thing as a refinance where she can, and I think that's what we've been talking about, is where she's in a situation, she's now on her loan, on her own, and they can use that actually as a refinance, right, to stay in their home.
Right. Well, if you get a regular loan, well, then you're gonna have to have regular mortgage payments. Okay, if it's a reverse mortgage, you don't have to have any payments at all, other than your taxes and insurance, which you would have if it's free and clear.
Right.
Okay, so the only option for someone like that is a reverse mortgage. That's the only workable option you can have. And the thing is, with the why that Valerie and I are doing this is there's so much misinformation, and there's so many you hear so many horror stories where they'll go, well, I'll get you a hard money loan. And people, what a hard money loan is: higher rate, higher fees, not very good terms. That's what it is.
Hard to pay off.
Hard to pay
low,
off,
that's what it
exactly.
is.
And it's like, in the one example, those people, they would have had to get like a 9% hard money loan that's due in 5 years. So what are you gonna do? If you can't qualify now, are you gonna qualify 5 years from now? Those are just Band-Aids on a problem. The thing is, with the reverse mortgage, it's a permanent solution that you can live with. And then, like I said, you can pay the interest only part. If you don't want your equity to go up, you can go ahead and pay part of it or all of it. Mine is $2,000 a month. If I wanted to pay 1,000, well, then only $1,000 a month is going to my principal. You see how that works?
So Ron, one time I heard a situation about someone who had taken out a reverse mortgage, and they were getting those payments every month, like you said. And if I understand it correctly, and so you help me understand here.
Yes.
So for our listeners and viewers, what was happening is this lady had taken out a reverse mortgage that she told her lender, I want to have income coming to me every month. That's what she asked them to do. So she wanted to receive $1,000 or $2,000 every month. So she took out a loan, which was fine. It was all clean and clear, and everything was perfect, all legitimate, everything. But then eventually something happened, and she said, I need more money. So then she wanted to go back and refinance and take more money out with her reverse mortgage. Ron, is that even possible?
Yes, it is. So long as you have the equity position and the age requirements, you can pay off that other reverse mortgage and get a regular reverse mortgage where they're going to give you money up and then a checkbook that you could write checks against it to yourself. So you can you can change the terms of that reverse. So long as you have the equity position there, the house, you have to have probably you need to have about 60%, maybe a little less. The loan can be about 45% of the appraised value. An example meaning, if it's $1 million house, you can get a reverse up to about 450. And that gets better as you get older. The hardest position on the equity position is somebody in their 60s. Okay, if you're getting a reverse mortgage at 85, they're going to give you a lot more money, and so that is another myth that you can dispel, is you can pay off your reverse with another reverse. Yes, you can.
You can.
Yes, you can.
All right. I hope that for our listeners and viewers, this has been an incredibly enlightening discussion. We're going to be doing community workshops, and we're throughout Orange County and Southern California, and we're going to talk about this. So keep in mind that we're going to post this on, not only that on our radio show, but we're going to post it on our website, alwaysageless.org, where you'll be able to find the information. And we want people to have the correct information.
Right.
It pains me when I see that someone's been given bad information because it benefited the lender, but it wasn't to the benefit of the client, of the customer. So be sure to reach out to us and ask any questions that you have. So we learned today that the government does not own your house. We learned today that your spouse can stay there if you pass away. And we learned that you can use it for refinance.
Mm-hmm.
And
buying and purchasing
purchasing a house with a reverse mortgage, which most people didn't even know. So if you have other questions about a reverse mortgage, we want you to reach out to us. Always Ageless is a show where we want you to have information about how you can either age in place or age in wherever you choose to go to, but you have lots of options. And mostly we want you to know what those options are, right?
That's correct.
That's what we want you to know. And Ron and I are both that adult children of aging parents.
Yes,
Although
yes.
Ron's parents unfortunately have passed away, I still have I am an adult child of aging parents.
That's awesome,
So
Valerie.
I am an adult child, I have an aging parent, and I'm in the sandwich generation. I'm a little bit of all of those. But we've watched Ron as he went through those things and helped his dad make those decisions, wise decisions for himself and for the caretakers, and how to decide what was best for him and his family. So Ron, before we finish today, we've got another couple minutes. Tell us some of the things that you've seen that you wish people could know, or that what you wish you could help everybody if they would just have this information.
What I've seen is that I could try to explain to people, it's best to be forward thinking on these situations and not wait till events overtake you. Okay, I have found that if you call a lender or a realtor professional before the world starts ending for you, that it makes the transition, it makes it way more easier to get the loan or whatever, or even to sell the house rather than being forced to, because all of a sudden this happened. It's good to have a plan, is what everyone should have some kind of a plan in place for their financial purposes, whether it's your life insurance or how my spouse is going to get money from our investments if I pass away. You should have some kind of just don't let events overtake you. Okay, you should have a plan. That's one thing I can tell you.
Of all the people I interview every week on our show and ask them the same question, all of them say, be prepared, be prepared, be prepared. And this week we had a giveaway. We have had a giveaway for a book that's called The Invisible Patient, which is actually for caregivers that are not just the paid caregivers, but family members who end up in the same situation that I'm in and that you were with your family, where we end up taking care of our parents. And Anna Lee Kruger, the author, talks about an aging plan, and she has a whole outline for how you can create this aging plan for your family. And none of us want to do that. None of us want to do that. I don't want to sit down. My son does not want to sit down with me tonight and go over our aging plan. But if there's an emergency and that phone call comes, right, where mom or dad have a stroke, or grandma has a stroke, or grandma falls, and you have that one phone call that comes, then everything is disrupted and you're not prepared.
Those conversations are best to have while we can still talk. Okay. My mother was very, from very depression era, very distrusting, because, they didn't trust banks and back then. And so how I finally got her to have a plan was, I said, Mom, if you don't have a plan, here's what's going to happen. You're going to go to heaven, and then the government's going to, if you want the government to get a third, my half brother to get a third, and I get a third, but that's what, if you do nothing and you're okay with that. Of course, she said, no, I don't want the government to get a dime. So that was her motivation, but we were able to have a good transition in a bad situation.
Then plan.
Exactly.
Ron Rinden, thank you so much.
Thank
my
you.
dear friend, and I respect you so much, and have through the years as we've been friendly competitors. And
very respectful, and I appreciate
very
your
respect
friendship.
each other. So
yes.
Thank you so much for being with us. And for our viewers and our listeners, watch. We are coming to a city near you for our community workshop, where we'll talk about Always Ageless, how we can help you be always ageless with reverse mortgages, care, and aging in place, and new technology, and all the other things. So thank you so much, our listeners and viewers. Tune in next Monday at 3 p.m. for Always Ageless.
Thank you. Thank you, everybody. Thank you, Valerie.